the Matty Moolah channel, and we are going through Cashflow Chronicles with your boy Matty Moolah and Hot Kris, the Daisy God. Kris is just grabbing some headphones really quick. We are on episode 39. If you guys have not already done so, be sure to check out the other 38 episodes that are up on the channel, as we may have already addressed some of the stocks that you may be interested in. There's a lot to go through today, so I'm going to try to keep us on point, because we are going to be discussing Palantir, which was up over 15% today, Abcellera, which was down after hours. We're going to be talking about Apple, which was down after hours. And we're also going to release a surprise today. Kris, I didn't tell you this yet, but I did take some of our winnings and bought a little stuff that we talked about yesterday. So we'll dive deep into that. That's a surprise for all of you guys. And hopefully you guys will continue to grow with us and share with us our successes, and hopefully they'll be mostly successes, because that'll put me and Kris to the test, but there will probably be some losses in there as well. But with that, as we grow, you guys will grow with us, and we will talk more about that once we get to it. Kris, there's a lot to cover today. There's like 4 or 5 different things. Where do you want to start? Do you want to start with stock earnings, with Abcellera, Palantir, Apple? Do you want to start with the surprise that we have for everyone?
So let's start with you know what? Let's start off with your victory of Palantir, because I know everyone's going to want that part first. So let's get that out the way.
Okay.
Has your conviction at all changed in Palantir?
No, I mean, I was expecting kind of what we had seen for the quarter. I wasn't expecting anything to be too crazy in terms of updates to the company at all. I did have the opportunity to listen to the earnings call. They said everything that I was expecting. Nothing really changes, right? I mean, I think it's just business as usual, and cool to see that Amit and friends had a crap ton of people watching. But to me, I think it's just interesting and cool to see that you're continuing to see the customer counts grow. Revenue grew 1% more than they expected. I think they were accounting for 16%. They ended up getting 17% growth. Fourth quarter of consecutive GAAP profitability, eligibility for the S&P 500. That's what everyone's kind of been banging their fists on the table for. Commercial revenue for the U.S. growing 33% every year over year. It's being dragged down by the government businesses, which is only at like 10% year over year. So there's that piece. And I think the cool thing that I like to hear from the team was they were trying to aim for, within the next year or two, $1 billion business strictly in U.S. commercial kind of going forward. Cool things that I still like to see in terms of opportunity going forward was we're at about mid-20s% cash flow margin and operating margin. And as everyone knows, the where is it in here? The operating there. Where is it? It's in here somewhere. Yeah, the gross margin is like 81, 82%. So just based off of how much OpEx the company kind of has, if they continue to grow at the revenue pace that they kind of are at, let's just say they're able to get back to 20% revenue growth over the next 2 to 3 years, you're going to be at a revenue of around $3 billion, because they're going to end this year at about 2.2. Add, let's just say, 40-50% from that in 2 years, because you're growing at 20% per year and it compounds on itself. You're going to be close to $3 billion here by fiscal year 25 or early 2026 on a trailing 12-month basis. That being said, if you're still hanging out at a $1.5 billion OpEx, let's just say $1.7 billion OpEx, then this thing's going to be generating about $1 billion, $1.5 billion of cash flow back to the business. And so I can start to understand a little bit now why the company is worth $35 to $40 billion. It's still expensive, right? So don't get me wrong in that respect. I mean, it's not a screaming buy, but going from 500 or so million on a trailing 12-month basis for adjusted free cash flow to $1.5 billion in a matter of a year or two, it starts to make a little bit more sense. So if you were to say, okay, trailing 12-month, $500 million in cash flow, then you start to divide it. It's a $38 billion company. You're like, okay, so it's at a 70x to 75x price to cash flow. That is expensive, but it's not absurd, right? And so you can start to see where things are kind of now. If you're able to keep that expense base really low, you're able to grow your revenue by 20% a year for 2 years, and you get this to the $1.5 billion range, then it starts to make a little bit more sense as to what the current valuation is. Now, do I still think it's a little bit expensive here? Of course. I think that this is always going to be a richly valued company. But I think that the feeling that I got before waking up today was, and then I'll hand it back to you. The feeling I got today before waking up and seeing these numbers was, is this a company that I think will eventually get into the hundreds of billions of dollars, right? Or even break $100 billion in, let's just say, the next 7 to 8 years when you get to the 2030 timeframe. And I was kind of scratching my head. I'm like, I don't know. It seems like things are taking a little bit longer than I was expecting, but after seeing the customer count growing today, it gives me a little bit more hope, but I'm still not completely convinced that, we will get to a $350 billion market valuation in the next, let's just say, 10 years, right? I think in order to get to that point, you're going to have to really fight. And these numbers are going to have to get better than they are today. I think this is a step in the right direction, but by no means am I seeing the 30% revenue growth that Alex Karp was talking about just a year and a half ago. And so maybe I'll be pleasantly surprised. The customer count did grow pretty expansively year over year. And these boot camps do seem very promising. The conversations that they were kind of saying was they're planning on having at least 100 or so boot camps just this year alone, which, is more than what they've done, probably over the last 20 years of kind of rollouts. They've been able to shrink their, onboarding process from 1 to 3 months to less than 5 days. And in some courses of action, what Alex Karpa said is less than 6 hours. And they're doing exactly everything that I've seen them do personally, because I have worked with the company before and still do, actually. But what took them, let's just say 5-6 months to do with us at Undisclosed Oil Company, it seems like they're able to kind of do in a lot shorter fashion, which is kind of what your problems with them were. I mean, the whole embed yourself in a company for 5 to 6 months seems very time consuming, seems very expensive, seems very, lackluster in terms of being able to go directly to kick things off. So able to shrink that market and that time consumption down to something that could be 1 to 5 days allows people to do more of a onboarding process they could take home. And also seeing them, really get legacy systems completely, I don't want to say dismantled within a matter of 5 to 6 days is really cool, but it makes a lot of sense. It's very similar to my experience, but it seems like they've really perfected the way to onboard people. And before it was more of like a discovery of leading people to the answer in a very soft manner. And I think a lot of industries and a lot of people and a lot of knowledge over the past 4 to 5 years since I've been onboarded with Palantir and Foundry specifically has come forth, like in terms of digitalization and people's knowledge about systems and actual categorization of data and actually being able to manipulate data for better use in business intelligence has come a long way from where I was 5-6 years ago. And the tools that are out there are a lot better too. So the competition is just more fierce in general as well. And so I think in reality, these guys have really perfected it after doing it probably now hundreds of times. Some of these people having to do it hundreds of times. They've really said, okay, how do we get this down to its simplest form? And I think it's really starting to pay dividends. But I'm really curious to hear what your thoughts are.
I mean, it's a very interesting thing to see. I think for me right now, I'm just looking over their pretty much their quarterly deck. Yeah, they're doing well, man. I think these boot camps were a great addition to getting their product out there. One of the biggest complaints that guys like me had was that, you can't go out there and just keep telling people, oh, we have the best software in the world. Yeah, okay, can I see it? No, no, you have to get a contract with us first. Like, that's stupid, right? That's like saying I have the best car in the world, but you can't drive it. Like, you can only drive it once you're off the, once you buy it. So that whole process was just not working. And I think they really flipped the script, and they are going the traditional SaaS route, which is good. I like seeing that. The government slowdown is not necessarily a big problem, only because just how lumpy the government revenues tend to be, from quarter to quarter. We had government shutdowns here and there and all this other nonsense. And I think long term, if this Ukraine thing gets solved, that'll be, Palantir will benefit significantly, because they were one of the few companies that were willing to partner with the Ukrainians to basically see everything through. So, in terms of like a strong partner, they've definitely got someone there. The commercial growth, that acceleration in commercial growth, is actually kind of impressive. That is what I like seeing in companies. Though I do think the valuation is stretched, especially now. I do think that I'm going to readjust my entry point if I do get a chance to re-enter the position. It'll probably be around the 12s. I think 12 is a pretty fair value going forward. But man, that adjusted free cash flow, that is nuts. That is a great thing to see. Whenever you have free cash flow, I always have this sentiment that this line of thinking that cash flows, that is what's going to give you the ability to make the changes in the business that's necessary in order to make the share price like really, really worth it. So right now, that adjusted free cash flow is going to do wonders for them. On a TTM basis, their free cash flow is almost $500 million, which is kind of nuts if you think about it. But still, the valuation that it currently has, which is I think is almost $38 billion, is definitely not worth it, especially considering the growth rate is, still slower than what was projected out. So I agree with you on that. I don't think that this company gets to the $200 billion valuation at its current growth rate. It's definitely gonna have to step things up. But what's cool is that they are taking the right steps in that direction. So hopefully I get a chance to add a little bit when it gets back down to 12. I think we'll see it get back down to 12. I've seen too many strong SaaS businesses get hammered. I think today there was a little bit of extra euphoria that really carried them forward, but
everything was up, man. Rocket Lab, Dutch Bros, everything.
I know, but they were especially like these guys were especially boosted. I mean, you're talking about almost 20% intraday, which I saw. I was like, God damn. Thank God I'm not the type that shorts or buys puts on things like this, because I'll buy puts, but only if I feel like it's there to protect me against some downside, never to like speculate on downside, because you never know with things like this.
Right.
It's kind of shocking to see, because it's like Google misses by 200 million on cloud revenue. Everything else is fucking golden, and yet they take a 10% dump. Palantir, on the other hand, grows their revenue just by a little bit, and it's like boom, everything goes apeshit. So it just goes to show you that the market in the short term is never what you expect it to be, no matter how good of a due diligence that you do. You just have to kind of accept that the market will do what the market does, and that's about it.
Well, I will say, I think the big piece that I believe that they're truly starting to see is they're seeing higher valuation deals coming in early and very quickly. And I think that that's something that can build. One thing that bothers me still is the net dollar retention. Somewhere within here is still only 107, 108%, which I'm like hoping that goes back to the 111, 112, starts moving that in the right direction, because Jesus, I recognize that they're not incorporating contracts that are less than 12 months old, but I still would like to see, these big contracts really move in the right direction. Because you think about it, it's, who's leaving, right? Somebody has to be leaving, because you see these big contracts from the Army going up in terms of total value. So that NDR is obviously very positive, potentially up to 150 to 200%. And so some people have to be leaving. Maybe it's too complex for them. Maybe it's not the right fit. Maybe they don't necessarily need as much. And so that's where I'm like still a little bit a little bit of a thorn in my side. Like, why is the NDR still only 108%, whereas Snowflake is, I think, in like the 120, 130%. I think they're doing really well. And so I think that in that respect, we'll see that. I think they report either next week or the week after. I'm curious to see how their NDR looks kind of going forward. But 45% year over year customer growth is nothing to scoff at, right? I mean, that's, if you have 2 years worth of that, you're doubling your customer count every 2 years, and then some, because obviously the rule is 72. I mean, you'll be doing probably 125% customer count growth every 2 years. That's impressive, and so if you're able to capture in even just like a $1 or $2 million deal associated with that, that helps in that respect. So kind of curious to see where it goes from here. 8% quarter over quarter, and 9% quarter over quarter customer count growth. I mean, that's, especially when you're getting into these bigger numbers, right? You're talking about adding a decent amount of clients every single month, or every single year. So even just getting $1 to $2 million contracts ends up being something that helps push the revenue kind of forward. But I think that this is a step in the right direction, but it is not where we need to be as of yet. So I'm slightly appeased. Do I think it's going to go back down to the 12s, Kris? I think that might be hard pressed, but I'd easily see it going back to the 14, 15s. But you're not wrong. I mean, companies, especially if the macroeconomic environment takes a dip in early 1Q next year, before earnings or something like that, there might be a couple days you get into the 12s. So it's not out of the realm, but we'll have to, I guess, see from there. Do you want to move on to Abcellera or Apple, or do you think there's anything else you want to talk about with Palantir?
Let's move on to Abcellera. I think that's kind of important to talk about. So
for sure.
Okay, so for those that know or may not know, one of the companies that I think is going to do exceptionally well long term, and I mean very, very long term. It's it's a speculative bet, but if everything turns out right, it could end up being a 20, 30, 40, even maybe 100x, return company. Oh, are you sharing your screen? Okay.
You can share yours if you have something specific that you want to.
Yeah, no, I have it already pulled up. So I figured, this way I could kind of go through it. So, one of the things is we have to understand where Abcellera is actually Can you share my screen so I can control it? There you go. It's the same thing. So I can.
Yes, Daddy. No, I'm just
kidding. So one of the things about Abcellera is that they are, even if they're not willing to admit it, they are something called a CRO. Okay, they're a contracted research organization. Basically, they are a bunch of scientists that get together. They have technology and techniques in order to research different antibodies to develop medicines and drugs that can be eventually tested and then released into the public sphere, in which case then they can make money off of it. Now, the way that they work is that they don't necessarily do their own clinical trials and all that stuff. What they do is they do the initial research portion. They partner with companies like right here, like Eli Lilly, with Denali, with Teva, Novarock, Inventex. And there's plenty of counterparties that they have. Like literally, if you see there, it's like the who's who of pharmaceutical companies, both small and large. They work with Abcellera to basically discover different drugs. And then after that, they actually put those into the clinic and actually have them tested and make sure that they're safe for humans. And then eventually they get FDA approval. Now, what's good about it, Abcellera, is that number one, let's just look at it from a financial standpoint, because I think the finances are important. Currently, the market cap of this company is around $1 billion. And if you look at how much cash that they have on their balance sheet right now, this is how much cash they have: almost $813 million in cash. So in terms of just book value, you're getting a pretty good value. You're not overpaying for this business, right? So a lot of pharmaceutical companies and everything else, they trade for premium sometimes. And so this right here, you can see that they're burning cash, but they're not burning a lot of cash at the same time. So if you see right here in December of 2022, they had about 915 million in cash. This time around, they only have 813, which gives them approximately 10-year runway. Now, runway is very important because runway lets you know, like, okay, how long has this business survived without any sort of income coming in? Now, they do get income. And it's published. And they really didn't do a good job of like putting that data out here in this
It's right there.
in this presentation. But basically, the research fees that they tend to get, that is what supports their existing operations. So in order for you to work with them, the first thing is you do a contract with them that guarantees them a certain portion of the royalty income that's going to be coming in from that medicine if it goes to commercialization. So as an example, let's say, you have a business that you have an agreement that 10% of all net sales end up going to Abcellera. So if you have $1 billion in net sales, that means that 100 million would go to Abcellera as a pretty much as a fee. So, that's pretty substantial once all that revenue actually starts coming in. Right now, they don't really have any medications that are currently in the wild. There were 2 medications that they pretty much worked with Eli Lilly to develop and get approved. One was called bamlanivimab, and the other one was called bebtelovimab. Both of them were used during COVID-19. So if you contracted COVID, they would give you antibodies that would help prevent COVID from spreading and actually help a lot of people. So a lot of those doses were all bought out by the U.S. government, Canadians, and whatnot. Eli Lilly is the main manufacturer of it, but the initial research and everything was actually done by these guys. So one of the great things about this is that they have a proven technology, right? They were actually able to discover antibodies that would work against COVID and develop them into actual useful medications that were then actually used on humans. So it's not like this company is just saying, "Oh yeah, we have this technology and it works," but there's no guarantee that it's actually going to be able to be commercialized. They actually have had commercialized products. The only thing is now those things are no longer in circulation, so they're not getting any revenue from that. So if you look at right here, in Q3 of 2022, they collected almost $100 million in royalties, which they did not get this year because, of course, they don't have any revenue from any medications out there. What they did get, though, was research fees. So when they do research for these companies, they do get certain portion of their expenses paid, and so that goes into their research fees division. So that's right here. But once again, they are spending money on R&D. So they actually upped their R&D budget last year from about 26 million to 36 million, probably because they've actually gained a lot of partnerships. So if you look at right here, these are how many programs they've actually partnered with. So that right now they have almost 182 programs under contract with 42 different discovery partners. So this right here is actually very important to see molecules in the clinic, because that means that this was already researched, that was already completed and done, and then put into testing. So right now, like these medications, they're not exactly going to tell you exactly what they are, but they're currently in phase 1 trials with these pharmaceutical companies. I'm going to stop here for 2 seconds and just say one thing really quickly. This is a very, very, very long-term play. All right. This is not something that you're going to put money into today and make a crap ton of money in like a year or two. And it's very, very important that people understand that this is a call option on the future prospect of this company going exceptionally vertical, so the way that I'm playing this is by just constantly DCAing very small amounts of money over a long period of time. Think of not drinking that extra cup of coffee and instead saying, "Oh, let me buy a few shares of Abcellera." Keep buying shares of Abcellera over a long period of time, because the total potential for this company, in my opinion, can be 20, 30, 40x, but it's literally 10 years from now. There's no risk of bankruptcy. They have excellent partners. Pretty much the who's who of partners are with them. So eventually, one drug is going to hit, 2 drugs are going to hit, 3 are going to hit, and then you're just going to see that stream of royalty for the next 10, 15, 20, 30 years.
Yeah.
You know, so
not like a quick spurt like you saw with CV19, right? I mean, because that was like a quick hit and then you're one and done almost.
Yeah, exactly. One more thing just to mention, do not touch SAVA. SAVA Pharmaceuticals, it's complete horseshit what they have. So
I do have a quick question for you. Everything in that presentation, I looked at it very briefly. I can understand why it's down a little bit. What is it, like 7% after hours? Let me double check. It went from, yeah, it was up 8% today, and then after hours it's down 12. So basically down net 4%. So I get it, right? I mean, you don't have that $100 million in revenue from the royalties coming in. The operating expenditures, you know, obviously don't get made up for by the $6 million in research revenue. The thing that I didn't get from the presentation is if you go back to the cash on hand, it was like 915 to then 800 something. There was like $100 million moved off from like marketable securities. And I wasn't sure if that was just like a piece of their credit facilities going offline or what. And that's where I was kind of confused.
Say that again.
Let me pull it up. It's like just one part of the slide. So it's like it made sense for the operating expenditures and everything of the like. Where is this slide? Pack, ABCL. There it is. So all of this made sense. This made sense. This made sense. The operating expenditures, the net earnings, so the loss associated with obviously not having a lot of licensing revenue come in. The thing that I didn't understand, this operating negative 24 million makes sense, right? This part of minus 200 million didn't make sense to me. This minus 95 million here, this minus 102 million here.
Acquisitions. So the marketable securities is they just rolled over marketable securities. That's why you're seeing that. So they rolled over shorter term treasuries into longer term treasuries. That's all. Okay. So there's not much for that. And the 95, I think it was an acquisition actually.
Okay.
That they made. Yeah.
And is that just like other research facilities that they're incorporating, buying out other?
Double check. It might be with like a facility because they just finished. I think either they're almost done with it or they're still building out their one of their like a office building specifically made for research labs.
Okay.
Yeah.
Operating expenditures, cash flows. Okay. Yeah, I'll just have to double look at it because that was the only thing that I was like, I didn't really see in there verbatim what exactly I was looking for. And so I was just like, I need to ask Hot Kris the Desi God because
I'll say one thing real quick because someone on our chat keeps talking about cassava. Alzheimer's drugs are notorious for being frauds. Okay. Alzheimer's is really hard to cure. And
yeah, it's a fucked up disease, dude.
Yeah, and cassava sciences, in my opinion, I've done the research. I don't think they have a valid product. So that's just my opinion. If you feel like there is, then there is. But Alzheimer's is just not an area that I would like to invest in, just from a pharmaceutical standpoint.
I do have a question for you. So you know, I know you have a decent, I don't want to say decent chunk in this, but you have some sizable money in this. To a lot of people, it'd be sizable. To you, it's probably small. And to me, it's probably smaller as well. But my question would be, I don't have a position in this. My thought is I have a bunch of stuff that, let's just say I'll throw $50 at Bitcoin every month, or every time I get paid, I'll throw $150 at Fundrise. If somebody, let's just say, wanted to start a position instead of that cup of coffee, like you said, and they were to put money into it, what do you think? $50 every time you get paid? Like where would somebody start with a company like this that would actually, you know, make an opportunity like this worthwhile. Because if you just buy a couple shares, right, it's not going to really move the dial. But if, let's just say, you end up accumulating a couple $1,000s worth and it goes to 50 billion, I mean, that's going to be something that's going to potentially move.
Yeah, I would say you just have to be, the way that I would structure it is that I would have a fixed dollar amount on a monthly basis that you just commit to buying it. Think of it as like a subscription, right?
Hmm.
So right now we all have subscriptions to different things, and you can, and Robinhood and all your brokerages, they have great like systems where you can say automatically trigger on every Monday to buy 10 shares or 20
Yeah.
shares, and that's it. You can do a dollar amount too. Say, hey, I just buy it and don't look at it,
Yeah.
and then just keep that account somewhere. And the thing is, it's such a minor amount that you'd never even know it's leaving your account.
Yeah.
So
I
that's
have a
the way
question
that
because you and I now have something like this that we could
yeah.
potentially attack. And I'm thinking like maybe I set up an automatic investment where, so we can talk about that maybe once we introduce that later on in the stream. Any further thoughts about Abcellera? Do you want to touch on the SAVA a little bit more, or are you done talking about that, or do you want to move on to Apple?
So I'll just quickly talk about SAVA because I feel like some people may or may not agree with me. I don't care really to begin.
Yeah,
Based on my due diligence, Cassava is a fraud. You know, all the shit that they're saying with helping patients and all this other stuff. There's like a lot of crap that they're.
this is a good question. While you're bringing up that SAVA research, why don't you wait till stage 2 is done prior to entering? At that point, do you think it's too late? You'll lose out on.
Yeah, I'm not sure, man. Like I said, I'll go into it deeper at another time with like all the data points that I actually have with regards to this company. I'm not just gonna talk about it without the data because I think the data is what really helps people understand. Like, oh, wait a second,
Sure.
they have a very I'll give you the main gist of it. They have a very small patient pool, right?
Mm,
And it's very limited. The data that they have, it's nothing that's proven, in my opinion, that really sets the tone. And yeah, I'd say just be cautious on Sava. If you really
yeah.
believe they're not a fraud, go for it. Maybe another episode we can actually like go through all the reasons why this company is a complete BS company. But
Oh man! Shout out all 103 people in the chat, man. That's awesome. I think that might be the first time we got over 100 in the chat there, hot Kris. So good work on
nice.
that. Okay, cool. Well, if we don't want to dive into Sava today, we'll definitely think about some time later on down the road. I know we have some free time now that earnings season's kind of coming to a close. I know we have the Bros next week. We have a few other companies next week that are reporting. But another company that did report today was Apple. And I know you guys already talked about it on the Chronicles, but I was surprised at how much the stock kind of got hindered with the recent release until I actually went in and looked at what actually came out. And it was kind of understandable that it was down about 1% overall on the day. It was up about 2%, and then it dropped 3% after hours. Uh, Believe it or not, this is actually the fiscal year 23 numbers for Apple coming to a close. So this is their fourth quarter numbers actually, and so you can kind of see all 12 months ended. They made about $300 billion in total. $383 billion if you include all their services revenue, which services is blowing up. That's actually pretty wild. But $383 billion in terms of total net sales, which is down about $9 billion comparatively. But you can see some of that's due to products. So they're down about $17-18 billion in total product sales, but they're offsetting that partly by their increase in services, which is about $8 billion increase year over year. So
you know what? I'm sorry, man. I have to interrupt and just show people this real quick because I
for
think
sure.
this is a really important thing. I know a lot of people in Sava
Just as soon as you said you weren't going to dive into it, but now you're.
I couldn't help it because I don't want people to like go into this.
104 people in the chat need to know about the fraud at Cassava, and I need to know. I don't know.
I feel bad because I don't want people to lose money. Okay, so a lot of research data, like this company's under multiple investigations. All right, already for fraudulent data, and right here, co-developers Cassava potential Alzheimer's drug cited with egregious misconduct. City University could not provide original data to refute allegations of image manipulation. There's tons of this stuff, man. It's like, I don't even know where to begin, to be honest with you. So when people buy up shitty companies like this, and what are you going to do? But just wanted you to know, if there are people here who want to actually know about Cassava Sciences, look up the data. There is a lot of due diligence that's out there. There's a lot of short reports that really made some good, compelling arguments, and they're actually being investigated by multiple agencies, not one, not two, multiple. So there's a huge risk to this company, and just be on the cautious side. They can't even fucking provide data
that's why we're here, man. We're here not to just provide some sort of hype. I'm sure, you'd probably get more viewers and probably more people actually watching the channel if you were just hype up all this stuff and say, yeah, SAVA to the moon, but that's not why we're here. We're here to actually help you guys in any sort of way, shape, or form. I don't think Kris and I could look ourselves in the mirror if we saw a company that we blatantly think is a BS sort of company and sit on here and actually say that these things are good. Generally speaking, if we bring them up, we think that they are good, and we always, Kris will debates, some things, just like Palantir. I'm not gonna lie to you guys. I think it's overvalued. I'm not gonna sit here and be like, oh yeah, like everything's going right to the moon. It's going to $100 tomorrow. Like I wouldn't be able to look myself in the mirror and say that I truly believe that. And so that's where Kris and I differ against some of these guys on YouTube. We're not saying that these guys on YouTube are wrong. It's just how they think. And sometimes I've gone it too. I've gotten lost in the sauce sometimes and gotten over my head and heels. And sometimes you don't know the risks of certain companies until they actually get realized. And sometimes you get smacked in the face and you start to understand what truly is going on. I had some people in the chat say, what happened to Disney? I started freaking out. I checked. It's up 3%. I thought like there was going to be some massive like downplay or something like that. But other than about kicking back into Apple, was there any other companies you wanted to bring up today, Kris? I saw Kelly was all hyped up that Shopify did well. I didn't really look into the earnings report, but of course, Shopify is one of the better Canadian companies out there. And I wasn't sure if there's any other companies you wanted to bring up as well, or if we just hop over into Apple.
No, let's go into Apple.
Okay. So expenses, generally speaking, they were kind of down a little bit with the product sales, obviously, as well. Gross margin going from about 170 billion. Let me get my pointer in here. 170 billion here, almost 171 billion down to 169. So revenue and gross margin kind of going in the wrong direction. Net income down, $2-3 billion. So not a lot, but they bought back shares, right? So all in all, even though revenue is going down, they bought back shares. You can see they had 16.3 billion shares. Now they only have 15.8. So they bought back 500 million shares. So of course, with that, the earnings per share is gonna go up from that. And you can see in the quarter as well, net income actually did pretty well because of the fact that they have the services income coming in pretty good, going from 19-ish billion to 22.3 billion. So overall, pretty impressive crap. I'm not gonna lie. We could go through deeper and deeper and deeper. You can see iPhone sales are falling off, but that's being partly offset by services again. Wearables seem like they're flat. iPad sales are down. Mac sales are down. Mac sales are down almost 25%, maybe more, which is pretty crazy. iPhone sales were only down, 1 or 2%. So that's anything to scoff at for the year. Keeping in mind that these two right columns are comparing 2022 to 2023 fiscal years. And then cash, obviously, still huge, right? $135 billion last year. They have $143 billion this year. If you include all the other assets like marketable securities and stuff of the like, they go, down a little bit. But, the cash piece is what's most important and most crazy to me, how a company can just have so much cash and cash on hand. I mean, 143 billion. That's Warren Buffett, Berkshire Hathaway kind of numbers, It's just kind of crazy. But if you think about it again, the company's worth $2.7 trillion. So really, I guess in this case, it's 4 or 5% of the company's equity is in cash. Total liabilities went down a little bit. Where was that mostly? Where did it go? Term debt. So it looks like they're buying back some debt.
Can you do me a favor?
Commercial
Can you look at the
paper.
long term? Can you look at the long term debt for these guys? I just want to see what the maturity schedule looks like. Only because what they did was they bought a lot of their cash flows more than cover it, so I'm not worried about that. But I
Yeah.
just want to know how much debt they took on to buy back a lot of that shares, because they were able to. This is where having a smart investor on your board helps, because what they did was when rates were really low, they actually issued a crap ton of debt, and they used that debt to buy back shares. So over time, they can use their cash flows to basically undercut. I mean, literally, they were getting 1-2% interest rates on their debt. So it's nuts. I just need to see what the total debt load is, because I want to see if they have any maturities coming up.
There
Is that
is.
saying there somewhere?
Where is the actual slide pack? I don't see a slide pack in here.
You can go to their SEC filings if they have it already.
They had an 8Q, but they didn't have
a 10Q. 10Q.
Yeah, they didn't have a 10Q for.
Scroll up. Let me see. By the way, this is not like an indicting Apple on anything. I'm just trying to show people as an example. It's usually in the liabilities right there. Total liabilities, term debt. No, but I want to see long-term debt, man.
Yeah, no.
What's your long-term debt, Apple? Hold on. Apple long-term debt.
I'm sure in the 3Q, it probably has it.
They've got about $98 billion in long-term debt. I'm looking at it right now. $98 billion, which is not bad. It's all cheap debt anyway, so who gives a crap? So they can easily cover their debt, not an issue. But it's just this is what I mean by like having good capital allocators on your balance on your board, because that was like the smartest thing to do at the time. Use your great credit rating to buy up to basically issue a crap ton of long-term debt, and then at the same time just chill. Like let me show you guys what I mean by that. 1 second. Well, if you want to keep going, Matt, you can keep going on that.
That was pretty much it. I think the only other thing, maybe just the cash flow statement as well. So operating activities, how much do they have coming in from operating? 100. Jesus Christ. Let me just double check. This is okay. So last year, fiscal year 22, they had $122 billion in cash flow from operations, 110, almost 111 billion, which is absolutely absurd. And then what did they do with this cash? They $76 billion last year, which I anticipate was for some sort of buybacks or something of the like. So what did they do? They're at about a 4. This is something that's pretty important, actually, because you think about it, you're like, Apple doesn't pay a lot in dividends. But you think about it, when you're a $2.7 trillion company, even 1% or 0.5% in dividends ends up being $15 billion worth of dividends, which I don't think this is the equivalent of what like Exxon and Shell. That's what these guys pay. And they're considered, dividend stocks, right? Companies that pay dividends versus Apple. You wouldn't anticipate that, but here it is, $15 billion.
So believe it or not, this is
in stock. This year they're buying about 78 billion. Go ahead, Kris.
This is one of the things I like about Google, because Google doesn't have any dividends, right? You're just doing pure stock buyback, which means that the share price is the main appreciation that they'll get. You know what I mean? So you look at Microsoft. Microsoft pays a dividend, which means some of their cash flows gets diverted into paying dividends. Whereas Google, they don't have a dividend. All they're doing is just buying back more and more shares, which means as a shareholder, that money is still coming back to you, but it's coming back to you in the form of additional cash flow that's basically being bought that's you being utilized to buy back shares. So if you look at the buyback program that Google has, they're buying about 16 billion a quarter right now of their shares. So I can almost see them doing about 18, 20 in probably a couple of years. So that's one of the reasons why I'm kind of bullish on Google, because if you look at the valuation of Apple on a PE basis versus Google, Google's trading under PE and at the same time doing a crap ton in share buybacks, which means that their PEG ratios is really below what it is. And Google at the same time is growing its revenues, growing its operating income, cutting on expenses. So it's just cash flow on top of cash flow. So you want Cashflow Chronicles? There you go. It's Google. So this right here is a lot of the debt that Apple currently has, right? Look at all this debt. But most of this debt, if you look at the coupon rate, 4%, 2.85%, and this is till 2061.
Jesus
You
Christ.
can't believe that. I mean, bro, that's nuts, man. And what's interesting though is that the sale price has actually collapsed significantly for a lot of these bonds. But that's what happens. Like if you have a low coupon bond, that means that you're going to get 0.285%. Well, you can go into the treasury right now and get 5.25, right? What's good about this is that this is guaranteed for until 2061. I don't even know if Apple will be around in 2061, but it's got a AAA credit rating. So that's
like, who's buying that? You think just like insurance companies are just buying that? Like, I don't think any right investor would be buying
no. Tons of people buy it, man. Like, look at the yield on it right now. If you look at the yield on Apple, it's like on these bonds, like 5.62%. This is what
but
I mean.
That's after the prices collapse, though, right? I mean, that's
Yeah,
just because.
No. I mean, that's what happens, right? As
Right.
interest rates go up, you know, the value of that bond is going to go down. So if you look at,
Damn it, that's down to 50 cents on the dollar. Is that what that just said?
Yep. And so, you know, what's funny?
Dude.
Google could actually probably do a tender and buy back their debt at half price if they really wanted to. But why would they? They got a sucker willing to lend them money at 2% for the next 30 years. Just kind of nuts if you think
the way
about
I
it.
think about that, though, is like, imagine we're in a situation where we do get into a recession, Chris, just like the pandemic, right? We weren't really expecting that to come out of nowhere, but interest rates were rising back then. We got back to the 2% range in 2018, 2019, before the repo market started acting up. I'm sure that if something were similar to what happened and we do a zero interest rate policy again because some sort of recession, that the amount of money someone can make on those bonds would probably be pretty good, because you think about it, it's like you go from an environment right now where we're yielding 5-6%.
It's a guaranteed double. You would get a guaranteed double.
Basically. Yeah.
Look at this right here. This right here is how the yield works. Okay. So when it was first issued in 2021, right, it came out at $100 face value. So at the time, it yielded right here 2.93%. At the time, if you went to the bank gave you nothing. So a lot of people are like, oh yeah, I'll take a 3%. 3% seems like a good return for a company that's not going anywhere.
Getting 0% in your savings account. Yeah, of course.
So now people bought these things up, and then comes the rate rises that we have, and look at what happens to the bond price. It just collapses. And now with rates being so high, right now, if you were to buy this bond, you would get a yield of about 5.62% yield to maturity. But the key to remember here is that what you're looking for is two different things. You're not only looking for that coupon return, because right now, if you buy this, you will get a 5.72% yield, but that's on the premise that you're buying it at a discount, which is at $55 per bond. The face value of this is going to mature in 2061, which means that this $50 that you lend them today, you'll get 100 back in 2061. That's a pretty shitty ROI if you think about it. But the key to it is that you doubled up on your yield, because the yield being that it's only about 2.85 face value. That means that if you bought this at, like, let's say $50, that means that you're getting double what this is, which is like, 5.6 something. So most people, especially insurance companies and everything else, a 5.72% return guaranteed actually fits right into their models. So it could work, just depends on the clients that would buy it. Yeah. That's not enough yield for me, boy. I need a guaranteed 12, maybe 15% return for the next I don't know, 10 years minimum in order for me to get interested in your bonds. But then
Chris needs
again,
that moolah, man.
huh?
You need that moolah.
That's right, bro. Trying to make that money. Dude, that's why I'm telling people, man, if you want a guaranteed 7, 8, 9% return per year, I could get that shit. It's not hard. Will it be tax efficient? I don't know, but yeah. Someone's like my brain, like, yeah, Dean, I'm sorry, man. That's a lot of math, but once you understand it, it's nice.
So what do you think, Chris? We've talked a little bit about through Palantir. We talked about Abcellera. We talked about Apple. Do we think we unleash the surprise? Maybe it's not going to be as cool as I think. I think it's going to be pretty cool.
Go ahead, put it out there.
Okay. So I got to think about the best absolute way to share this. But what Kris and I are going to do, let me see if it shows. Okay, it does. So Kris and I are planning on taking all the money that we make from Cashflow Chronicles and putting it in an investment account. And so to date, over the past 2 months, we've been able to make just shy of $500. And with that, we are going to basically invest in stuff. So today, Kris, I bought TLT. We talked about it a little bit yesterday. So I bought 1 share. I was like, oh, do I buy 1.5 shares? I got super excited. I was like, you know what? It's like, let's just buy 1 share today, and we'll talk about it.
I'll give you 1 to buy DPST tomorrow. Buy like DPST? 2 shares of DPST. Yeah.
Okay, I'll put it in an order for that.
It's a triple leveraged regional bank ETF. It's a short term, like in and out.
Yeah, it's the 3X, right?
Yeah. It's the short term in and out. But I think it's going to do exceptionally well in the next few months. I don't know if you know, Bill Gross has actually started buying TFC because Bill Gross, the bond king, knows Chris Patel.
I think he follows you on Twitter, dude.
He doesn't follow me.
you know we're doing that. I was trying to hype you up. But.
I actually had a dream the other day that Bill Ackman retweeted something that I said, which is kind of crazy if he did. But yeah, I'd say regional banks right now, they're on the up and up, baby. Trading under book value, especially TFC. Maybe we should, dude, make sure you sign up for level 3 options so we can do a spread on a couple of regional banks.
For sure. So this will be fun because I think we'll obviously be growing the accounts, obviously because we're investing, but also because whatever you guys give, whether it's memberships, whether it's just watching the show, whether it's anything, we'll be adding $100 or so a month. Eventually, they'll get into the thousands, and the hope is, of course, that everybody in here will be able to participate. Kris and I will chat about it very frequently. I just saw some fuzzy. God knows what. I don't know if it's from my head or whatever. But anyway, yeah, the hope is be able to share with you guys and share once a week or discuss what we bought. And, it'll be fun. I think on the 20th or 21st of every month, we get our income from Google. And so with that, we'll be adding it into here. And then eventually we'll have our separate channel when this gets big enough to start its separate channel, and then we'll have the ability to continue this. And really what we just want to do is bring you guys along with us. We know how hard it is starting from zero. Kris and I, I'm sure, both have done that, in our own right. I did it about 10, 11 years ago myself. And so just because I want to kind of relate back to the individual person, the people that we're talking to on Cashflow Chronicles, which is, the everyday working human being. Sometimes it feels like Kris and I may have lost touch because we have such large portfolios. And the reality is we want to make sure that you could see in front of your eyes us growing from scratch. And so when you looked at the thumbnail and you saw the $478.97, that's where we're at today. And we hope to share on the thumbnail. I might forget every once in a while, but the hope is at least every day or once a week, we share the results of what's going on in this folder. Or this portfolio, and we continue to buy. And if we think things are maybe too much price, we'll sell them. So I think it'll be really cool to eventually see this grow. I don't think it'll be very long before this will be in the tens of thousands and hopefully hundreds of thousands. So, Kris, anything to add? I kind of just stole.
I mean, I thought about it. We're taking a pretty big risk by showing people, because here's the thing: if we fail, that means that we're a bunch of idiots, and then people are going to stop watching.
Well, I know I'm an idiot, but
I mean, Who knows, man? Well, no, I've got some great companies that we can take a look at and develop a portfolio around it, so this way you guys can see that we're being transparent with some of the stuff that we're doing also, because a lot of our thoughts aren't just based on, hey, I'm going to talk this company and then I'm going to pump it. I want to show you guys what I actually see and what Matt sees, and then use that as a as a way to basically challenge ourselves to only, like, I'm thinking about it right now and I'm like, man, like, there are some speculative companies that I'd love to have in this portfolio, but I'm not going to, because I want to have like the cream of the crop picks for this portfolio, so that this way it always looks on the positive, so a lot less speculation. So we'll see.
But I was thinking when you were talking earlier, you're like, man, just take some coffee money and buy some Abcellera once a month. I was like, huh. I was like, I mean, I could set up an investment on the 21st or 22nd of every month whenever I, do my transfer from my checking account. And I'll just be like, yeah, just buy $5 of Abcellera every month. I don't know. We'll discuss it.
Someone suggested M1 Finance. I like M1 Finance. Don't get me wrong. I think they have a great product. The only problem is, unlike other maybe retail investors, like, or other channels, I do actually do higher level options. And I also want to do bond trading, because I think bonds are very, very I guess, underspoken about. I don't know how they're just not spoken about. But there are great opportunities and great return potentials at a very fixed, guaranteed way that you can actually make money in this market. And that's like believe it or not, bonds are like the secret that no one wants to let out. I don't know if you know that. Like, bonds actually can generate, if you know what you're doing, you can actually outpace and outperform the S&P 500 very easily with a good bond portfolio, and have consistent long-term returns.
Yeah. No, I mean, even something as simple as the thing that another piece is like CDs right now, right? Say you're a retiree, right? I was just talking to my mom about these. I literally, because I didn't know what the hell was going on in my traditional IRA, just bought a CD from Oklahoma Bank, and it was a 6-month, I forget what it was, but I just checked and it paid me, it cashed out at the end of the last month. Which I then rolled into buying in the S&P 500 because it was down to like 415. I was like, well, if SPY's at 415, I'm a lower my cost basis. So I did, but I think I got paid $25 just for having, it's like, it's not a lot of money, but think about if I had $100,000 in there, I mean, it'd be, a good chunk of change. So $1,000 I made, for $1,000 in principal, I made $24, 2.5% basically.
Which, I might have to send you $1,000 or $2,000, Matt, and just put that in our magic account, because the numbers are small. So it's like it really reduces down the optionality on like some of the stuff that's like really interesting right now. So I'm like, oh man, I wish I had at least $1,000 in there. Come on,
it'll grow. It'll grow with time. And whenever you put in there, I'll match as well. So
okay, sounds good. Sounds like a plan, man.
Yeah, but yeah, I thought it was a really cool idea. Kris floated that idea a couple weeks ago to me, and I was just like, I really like it. I've thought about doing that in the past, and Kris and I are both like-minded. We're both very long-term mindset on this, and we hope that Cashflow Chronicles grows into being a great opportunity and episode for people to learn. We're already on episode 39, and so hopefully by the time we hit 100 episodes, this thing is in the couple $1,000 range, and we're making and wheeling and dealing. So fingers crossed.
I think the most important thing you said is learn, because I think that's one of the keys to good content, is being able to like teach people how to navigate through investing, right? Like, so it's not just about, hey, pick this company and it goes up, sell, and then that's it. Like, no, understand why you're buying it, understand why you're selling it, understand why. And it's not just about just regular debt. I mean, regular stocks either. Like, invest in other asset classes, preferred equity. You have your dividend, you have your REITs, you've got bonds, you've got junior bonds, secured bonds, you've got ETFs that have nothing but bonds, you've got BDCs, you've got so many things. And you know what? I'd love to have Steven on here too, man, because Steven's actually pretty knowledgeable about this kind of stuff. And so, yeah.
Mike Wilder did. Shout out. um, I'm curious, man. I mean, I think there's so many avenues at which we can help people. I think somebody said, having one-liners to kind of help people understand why a certain trade was made. I think that's pretty genius. I'm trying to think if it's something where we have like an Excel workbook on the side that we, kind of host our trades or something like that. But I think it's going to be pretty tough.
Let them just watch the portfolio.
Exactly. I think like doing all that, I think is just pretty tough. I think what we're going to end up having to do is just, you're going to have to watch every episode and chime in. And of course, if people on the side chatting, and have a good idea, maybe we'll run with it. But I don't think that
maybe if we get big enough, Maddie, we could just take all the money, go to Vegas one weekend, and just blow it all on the craps table. What we did this time, we had a fucking blast, man. That was fun. Yeah, that's the other thing. Maybe one day we'll do like a casino special where we do nothing but just go over like casino strategies and craps.
I'd be cool with that.
I think a couple of people had a great time with us. So
it was good. We didn't talk about it much on this channel, but I know you guys talked about it on Finance Junkies. It was a blast meeting TJ, meeting you, meeting Carlos, meeting Amit, meeting Kelly, meeting Tevis. And then, of course, all the people that support us. Like June was there. It was cool to be able to sit with June. I had like an hour-long, a couple long sessions chatting with Miss June. I met Michael Wilder. That was a blast. Garcia was there. So
I was a little bit worried about Garcia, though. I'll be honest, because I showed him. Because me and him were at the craps, the bubble craps machine, and he was winning. And he's like, bro, I just turned like $40 into 120. So I was like, oh no, I've seen this before where people get addicted. It's like, oh, I just need to keep doing this. The last time I showed someone how to do this in craps, it was my wife, and like I woke up at like 4 a.m. and I found her. She was downstairs, freaking on the craps machine. So I'm like, bro, I hope I didn't like. What is that thing called? Like influence him to like start like, oh man, I could turn this into a long.
I will say every time I play like computer game craps, like that version, I do well. Every time I play like physical craps, I don't do well. And I think the reason why is because I always hit to whatever the odds are. Like I just do the pass line and the 6 and 8. And if it's like a 5 or a 9, maybe I'll run the odds to it. If it's 6 or an 8, I'll double the odds in the back. But if I'm always running 6 or 8, generally speaking, you're in pretty good odds. And if you crap out, you crap out, and you hit a 7 on the pass line, then you're getting paid out, and then they establish a point again. I don't know. On the computer, I always did well. Like I put $50 in or something like that. Me and Tevis were just shooting the shit before dinner on Sunday night, and I think I turned like $50 into $250 within a matter of like, I don't know, 10 or 15 minutes. And I'm like, where the hell was this? Because I think I walked away, I don't know, losing $1,500 or something like that. It's not a big deal. I didn't lose my shirt, right? But I wish I could just always stick to it. I don't know if it's something like, oh, let me play the field really quick. Like I just hemorrhage cash. Like, I don't know. I go full tilt when the money's in front of me. I'm just like, anyway.
Yeah. No. I mean, for me, I usually don't pass 6 and 8, and then I'll spread it out. Like if I'm feeling really lucky, but yeah, man, it was good. It's a team sport. Everyone had a great time. We all had a lot of fun. So
I did do. I don't know if you saw my. I don't know what we're calling it. It's up to you guys, right? I wrote the tweet. I kind of felt bad. I wrote the tweet about like, where are we going next for Junkie Con 2? And I was like, shit. I was like, I just named it. I was like, I don't even have the right to name it. I'm not a junkie. I'm like, that's you for, right? So,
it's all right. It's all right.
So I felt bad, and then I was like backpedaled. I was like, whatever, Vitali and Carlos and whatever want to name it. But I think Junkie Con's pretty cool. But they said that they wanted to do a cabin or a cruise. Cruise would be easier for sure.
Yeah.
But I will say, I was looking up some pretty sick cabins on Airbnb that like you could rent out that people do for like corporate events and shit like that.
Mm-hmm.
And I wouldn't put it out of the realm. I mean, if we're able to get like less than 50 people next time we decide to do one, I would say, especially if you're able to get like a cook and stuff like that.
Yeah.
I wouldn't put one of those pretty cool big cabin / ranch venues out of the realm. But if it's above 50, I feel like you have to go cruise.
Can you share my screen? This is what was legit, like Pigeon Forge, Tennessee.
Oh, dude, I loved it.
Yeah. So let me just actually close this 1 second. Let me show you. So maybe in the future we could do something like this. But they have literally cabins, and you have hot tubs outside looking at the mountains.
It's a beautiful
like,
place, man.
Look at that. You could.
Is that the one that you stayed in, or is that?
No. This one's different. You could easily host like a good number of people. Just got to make sure they're not weirdos.
When are we selling this portfolio that we're sharing on my screen and buying some of these properties? Because it's
pretty legit, man. It's pretty legit.
That's a couple years down the road, but
it's more than a couple of years.
Right.
You know,
cool. Well, I'm excited. We got that alpha down the road. How many shares? 2 DPST. Do we want to buy any Abcellera? Or what?
Well, yeah. You know what? Why not? Why not just buy it for tracking purposes?
Yeah.
More than anything. You know.
How much Abcellera? Because we got
just
400.
Just one Abcellera.
Yeah, we got 400 or so in cash. So I'll do 1 Abcellera, 2 DPST.
Do 1 DPST. We'll keep it
1
very
DPST.
light. Yeah, let's save some cash. Maybe something goes wrong and we need the money to buy some more stuff.
I mean, what's DPS? DPST was like $30 or something, if I remember correctly.
Yeah, 52 now. It was up like 15% today. Yeah.
How much?
52.
How much was it up though?
Like 16%. It's triple leverage, man. Bill Gross is in it with me, baby. $53. It was up $7 today.
Are we buying TQQQ as well? No, I'm just kidding.
You see, this is the inner degenerate coming out, man. Why not buy 1 TQQQ and buy 1 DPST? Why not?
Okay, and 1 Abcellera.
We'll spread the love a little. Yeah.
That my TQQQ. You know this. TQQQ is my go to zero or to Valhalla strategy, where like I have 50 grand in it, and I'm like, if I lose 50 grand, I'll be pretty upset. But if I'm
kind of happy. Garcia has some calls on TQQQ. Hopefully he didn't sell any. Hopefully he kept some, because today was a good day. We were actually recovered a little bit.
Yeah,
so
maybe.
Michael, all right, my friend. My calls are pumping it. Do not buy calls on TQQQ, you fucking crazy ass people, man. That's some
Michael Wilder is wild, man.
Bro, we're not degenerates. These people are degenerates, all right? Who buys?
Well, you should have seen these degenerates in fucking Vegas, man. It was. I felt like I was
on triple leverage ETFs, bro. That is nuts. So
I mean, if it hits, it hits. I knew a guy. Unfortunately, he passed away. He was doing options to make income for after he passed away to give to his wife, and he was always writing. This is when SOXL, before it split by like 20-1 or something like that. He was writing SOXL cash secured puts on when it was like $600, and he was writing them like at the 30 delta. Like we're talking, and he was just like, if it drops, I'll just roll it.
Garcia is the Garcia. Did you sell your TQQQ calls? Did you sell them? I gotta know, bro. I feel bad if you did. I sold TQ calls and bought leaps on Palantir and Tesla. And, oh man, no. I'm telling you, bro, we got some degenerate followers. We need to end this now before we start getting.
Why are we sharing this our portfolio? We need to keep our portfolio quiet because
these guys he's gonna come out like these goddamn degenerates, man.
Yeah, the SEC is gonna come after us, bro. Anyway, all right, good seeing you guys. We'll see you next week. Next week, actually, might as well just share it while I have it up. And then, Kris, if you know of any companies that we need to talk about next week, let me just pull this up for our quick schedule that we have. We have Nintendo Dutch Bros on Monday. Some guy keeps telling me he has a bunch of people he wants me to bring on for Nintendo. We'll see if they follow through. None of them have DM'd me, but he keeps poking me. Then we have Rocket Lab and Disney on Wednesday. And I felt like there was somebody that we were supposed to do on Thursday, but that we talked about last night. But I will have to go through and see if I remember.
Garcia, I'm proud of you, man. You got to don't freaking buy calls on TQQQ, you crazy guy, man.
Hell yes, man. At least mine, they could sit there. They're down 20%, but eventually they're going to go to the moon, man.
Dude, oh man.
Wait, Kris, just wait, man. Wait until like we go and everything goes in the market. The SPY goes above 5,000. I'm sitting there. I got my Lambo Urus. I'm pulling up to Georgia to come meet with you when the new Dutch Bros opens there. It's gonna be fucking awesome.
I hope so, man. All right, let's see. Later.
All right, brothers. Cheers.